All right, y'all, this is Uncle P. And I gotta keep this real with you guys. Some of you guys, you look at these trade setups and you love the fact that, okay, Uncle P get these pips and this and that. You know, this trade to the top was 166 pips. If you had this one, that was 196 pips. Okay, that's pretty cool, nice, and everything else. But here's the problem. The deal is that a good trader on a professional level knows when to get into trades and when the heck to leave them alone. I'm going to show you something very simple that prevents me from even wanting to take a look at charts right now. Okay? Something very, very simple. And I'm going to give you information on this free indicator so that you'll never make this mistake yourself. Okay? If I was to take a trade right now, the problem is right here. You see what this says? This says the spread is 33 pips. That means if I take this trade right now, I'm going to automatically be upside down by 33 pips. Did you hear what I said? Let's go to another setup. If I go to GJ, which by the way, this was a beautiful setup last week. You see it? Look at what happened here. If I take this, I'll be spending 11 pips just to get into the trade. Okay? So look at this one. If I get into this trade here, and you can see this is called your bid-ask spread, and you can see it's moving. The market is open, but look at how wide the distance is between here and here. The typical spacing with this broker is about maybe 3 to 4 pips, maybe 5 pips. Right now, what do you see? 17, basically 18 pips you're going to make. What's the average? And I'm just questioning you guys. I'm trying to give you something to think about. What is the common, let me see how I can put this. What is the common stop loss that the average retail trader typically use? That's what I want you to think about. What is the average stop loss the average typical Forex trader use in the retail space? This is CAD JPY. This also, you could have made a bundle of money off this trade last week. You can see this arrow came in for a buy. It went sideways and then blasted off. And this trade made you about 244 pips. Then it came in and reversed. And now it's sitting here, creating what we would consider a possible double bottom if this thing bottoms out and bounce up. But right here, so far, we're looking at 232 pips. So you could have made over 400 pips with 2 moves with this trading system, which, by the way, I'm using the Sexy Analyst along with the Simplicity system, which I live by. And you only got, by the way, 20 minutes left or 19 minutes left before the deals are over. But the point is of this video, look at this spread right here. 15 pips. So I'm going to go back to the question I originally asked. The average retail trader uses how many pips as a stop loss? The average retail trader uses, and I'll give you the answer, approximately 20 pips, 10 to 20 pip stop loss. That means if you're using 10 to 20 pip stop loss and the broker spread is already at 15, or in the other situation, and I forgot what pair I started with, 33 pips, then riddle me this. How in the heck are you supposed to make some money? Any little small move and you're out of the game already. You see what I'm saying? Here it was, NZDJPY. 33 pips. So the moment you put your trade on, look at this, and you can see the bid-ask spread. Here we go. This is what the broker is going to place your trade at, way up here. Get what I'm saying? Or way down here. But it's going to have to come all the way up for a buy. It's going to have to come all the way up here, break this line, and then you'll see positive territory, because for a buy trade, this white line applies. Your trade will be way, as a matter of fact, no, I ain't going to do it on this account. I'm getting them backwards, but you guys get the point. The point is that the bid-ask spread means that this is where the ask price, which is what the broker is charging, versus the bid price, okay? So depending on what kind of trade you place, and either way it goes, you're going to be upside down by 33 piparoos before you can actually take the trade and be in positive territory. So you got to pay attention to the broker spread of what they're charging. Let me say this to you, and let me be very candid. This is exactly why And I get brokers who hit me up, they stalk me. One broker actually said, I know I'm stalking you. He literally said that. I know I'm stalking you. I'm this high position in this company, and if I say the name, many of you guys will know exactly who this broker is. They try to stalk me. Hey, we really want you to come on board and represent and let us, and I say no every single freaking time. You want to know why? I told them this. I said, until you fix this problem, if you really want my business and you want me to endorse you, then fix this problem. You guys are constantly advertising low spreads, but you pop up there and you throw up, guess what? The Euro USD. Watch this. Even this got a 10 pip spread, but normally it's only 1 pip or something like that, right? So they'll throw these up. Look at that, 21 pip spread. That's not normal. And that's really because a lot of these brokers are the market makers, or the brokers, the banks and institutions are not open. And when that happens, that leaves this for the players to play with the spread, which is your broker. Your own broker is robbing you blind because you're not paying attention to this. And you say, well, the market ain't open. Yes, it is. You've seen that other one was moving. It just, see, it's moving. See, 17.8 pips. Look at this. Watch as I speak. I'm not going to go to another pair. It's just going to flicker. See, it's moving now. It's moving now as we speak. See, it's just bipping around. Not much, but it's bipping. See, there you go. See, it just moved. The market is open. They just happen to look at that. Did you see that? Look. Remember, the spread was at 17. Now look, it was at 17. It jumped to 20. Now it's back to 17.8. See, the brokers are having a field day with the retail traders while the banks and institutions and the big players are not around. So they're just ravaging your account, and you keep jumping in, being in a hurry to jump in the spreads because you don't know how to check the weather conditions before trying to look for a trade setup. All you know is price action. Look at this. See? Look at how this is flickering back and forth, and this is flickering. That's your broker messing around. And most brokers do this. And so I told this broker, I said, if you want my business, show me that y'all going to stop doing this to the retail traders and stop advertising. Look at that. It dropped to 14 pips. See how it's just jumping around? That's not normal. That's not normal. I say, so if you fix that, then we can talk. You think they fixed it? That's why we ain't talking. See, I'm not going to put my name on something while y'all pulling this foolishness that you got going on. I almost used the word, but I ain't going to say it. But y'all get the point. The point is that they're taking advantage of people because they know that the average retail trader know nothing about this. So here's the big banger for those who are willing to hear me out and say, hey, Uncle P, thank you for the information. I was patient and willing to hear you. Look at this. This is Euro JPY. All these beautiful setups. Okay, you had opportunities for great setups, and they will come. Look at this beautiful setup. Look at this beautiful setup. They will come, but not at this price. You don't want that. You don't want that. Okay? So since you held on to me, and this is my first actual teaching video of the year, then here's the deal. The information you need to get this indicator, which is no cost, it's absolutely free. You want to go into your market store, which is at the bottom tab, and you want to select your market store, marketplace, or whatever to call it. And this indicator is called Info Plus. Info Plus. INFO Plus. Okay, two words. Info Plus. Just download it. It's free. It's provided by your MT4 market store. Just go to the free indicators and download this. And now you can add this to any one of your charts. And right off the top, now you got them. You know exactly what the spreads are before you enter the trade. Okay? Because again, this is also why I keep telling you guys I've been preaching this for God knows how long. I have been telling you guys, I said, hey, do not ever take a trade at 5 p.m. Eastern Standard Time. Period. Don't ever, for the first hour of the trading day, don't ever take a trade during that time. Why do I say that? Okay, unless it's the Euro USDs or something like that, or the USD JPYs, so they typically try to hold those real low. Today is holiday time and banks are closed, so they're really having a field day with people. But normally, those on the Euro USD, USD JPY, USD Swiss, and USD CAD, and GBP USD, AUD USD, anything with the USD, they kind of keep those low because they know those are the popular pairs. So in order to entice you to come in, they try to advertise low spreads on those. And so when the market opens at 5 p.m. Eastern Standard Time every day, they kind of keep those relatively low just so they can keep their promise to you guys on that. But they know that you're going to be trading other pairs, so therefore they never tell you about those spreads, okay? And because those things are so huge, that's where they will tag you at 5 p.m. Eastern Standard Time. This is a typical thing you'll see where the spreads for the first hour of the new trading day. And what is a new trading day? A new trading day starts at 5 p.m. Eastern Standard Time. It doesn't matter what your time is in your country or in your state. It is what, according to GMT time, 5 p.m. Eastern Standard Time represents the new trading day. And because of that, they will take you to the rack for the first hour, hour and a half of the trading day. That is why I've been preaching this. Stay away from trading for the first hour of the trading day at 5 p.m. Eastern Standard Time. This is exactly why I've been saying it for God knows how many years. And yet, retail traders get anxious to get into a trade, and then they get sucked in. Price action barely makes even a move or a blip, and yet you get taken out. Why? Because of the spread, the broker getting paid. Okay? All right. I'll see you in the next video. And again, you only have a few more minutes before the sale, so take advantage of it, because when it's over, it is over. And I will see you guys, all those who are in the family already, I will see you on Tuesday in a live session.